Okay, guys, welcome to Dr. Chef's Crypto. This is Dr. Chef, and we're going to keep talking about really the only thing that matters in the world of crypto and the thing that no one else is talking about for some bizarre reason. So, we're going to keep covering this because if this is traceable in the way it seems to be, then we're going to be in very, very good shape. Now, I have checked today and the last few weeks all of the sites, all of the YouTubers, everything. And it is bizarre because there's basically no one talking about long-term things. Everyone's talking about short-term things, such as the effect of the Ukrainian war or Elon Musk buying Twitter or whatever it happens to be. They're talking about releases that are happening and airdrops. They're talking about NFT sales and all kinds of interesting things. But none of them are really dealing with where we are. Now, I know why. The reason why is that this is boring because it's a multiple year concept. People that are in this space, the majority of them have very short attention spans. Most of the people involved in crypto are trying to get in and out and make a bunch of money. They've seen over the last few years all this stuff like the big Doge hit and all these things that happened. And people that went in early 2020 and came out in late 21 just got crazy rich. So everybody's looking for that. But they don't know why the people that went in early 20 and came out in late 21 and how it worked. They don't track the pattern. As you know, I do track the pattern, and I have a chart that shows everything, and we're going to go over that. But people are looking at temporary. They're like, the Bitcoin is going up here in the beginning of May or in the beginning of April, which means that by the beginning of May, it should be back to 50K and blah, blah, blah. And they're doing all this analysis based on very short-term things. I realized this when I started noticing people using 15-minute charts and 10-minute charts. That's ridiculous. Now, I'm not saying you can't day trade and you can't make money. So, for instance, in March, this is early. This is coming up on the middle of April right now. So this is a week or two in April. Throughout March, we had a swing of around 37 to around 47. So we had about a $10,000 swing in Bitcoin. Now, on my chart, I'm using averages and I'm tracking macro patterns. So this is kind of irrelevant for long-term usage. However, if you were doing this on a day-to-day basis and you could pull 10,000 out of a 40-something deal, you're talking about a 20% gain, which is pretty dramatic. So it's not that you couldn't day trade and utilizing a pretty good chunk of money make money. You can have this easily be a job and do it as your day job. But that's not what I'm talking about. I'm talking about macro patterns and the long term. Been talking about this for a year, and it is, in my opinion, the most important part of the whole crypto subject. To recount for you, those of you who do not know what I'm talking about, please go back and watch all the dozens upon dozens of videos about all this stuff. And if you're coming here for the first time, welcome. I'm Dr. Chef. This is not official financial advice. I'm not official financial advisor. This is education, entertainment purposes only. If you are a regular follower or you're trying to learn all these things new, please go back and go through more of the basic training. What I'm talking about right now is pretty advanced and deep and complicated. And that'll be demonstrated by the chart that I'm going to show you. But let's just take a quick look at Bitcoin today. So I'll switch over to the screen and we'll go over to some of this stuff right here and we'll just take a look. This is Bitcoin today, right now, as we speak. You'll see Bitcoin is $42,900, about $43,000 it's trading for today. Now, if you do some very quick math, your quick math looks like this. Bitcoin's in the low 40s. The high was upper 60s back in November, so we're running at about 60%, give or take. What does that even mean? It's been like that for most of this year. People are kind of sad, or they're kind of burned out, or whatever it is, because those numbers are not what they want to see. They want to see a big giant climb in Bitcoin above 68 to 100 or more. But this is not happening, and it's not going to happen anytime soon, and they're not sure why. But we are, and here is why. If I'd reduce this and you've seen this chart, you know what I've been doing. You know that I have tracked every single month of Bitcoin since the beginning. I have tracked every single shift, every single movement. I have analysis charts built in, which are analyzing after an all-time high, what happens after a Bitcoin halving, what happens. You can see these running percentages on all these numbers. You can see what I've been doing. Now, down here, there's some good things and some interesting things happening. So let's just talk about March. This is the beginning of April. We've just finished March. Here's the chart. As you can see, we tracked basically exactly like we were supposed to, with some variations. Here are the numbers. What you're looking at is the month after the all-time high, and you're looking at 14, 18, and 22. Okay? Now, if you don't know how this works, in 12, 16, and 20, there were Bitcoin halvings. 16 to 18 months later, there were all-time highs. We had a Bitcoin halving in 2020. The all-time high for Bitcoin was recorded in November of 2021, almost exactly 18 months after the halving, just exactly like it was in 2018. Therefore, 14 equals 18 equals 22. As we take a look at those numbers, we see things like a 90 and 81 and 93. These are percentages, right? And you see a 50 drop into the 50s, and you see it hanging around in the 50s here. Here's some 60s, right? Now, what these numbers here are averages of the 14 and 18. And what we have here is the monthly highs from 18 and 22 and the averages. And this is based on the average, and this is based on the all-time high, and this is an average of those two. I know that's all very, very complicated. The point is we are trying to create a tracking because we have noticed that it tracks. So, for instance, 1 month after, 2 months after, 3 months after, 4 months after. So where are we right now? Well, right now we would be November, December, January, February, March. We would be approximately 4 months after. And 4 months after shows a pretty good difference between 14 and 18, but it runs in that 60 range. So obviously with 18 being more recent, we should pay more attention to 18, and we will notice that in 18, the 4 month after point was at 0.67, 0.5 something, and this could be a fluke. You got to be careful. So you got a 0.55 average up to 0.67. So a lower 60% average for the month of March would be on track. The average for the month of March, it went from around the 30s to the upper 40s, the average being around 42. 42 is 0.66 or 0.62, depending on which math you use, for a 0.64. In other words, we're looking for a lower 60 percentage point for the month of March, and that is what it was. We were looking for 60-ish for January and February, which is what we got based upon this right here. This is a 60, this is a 60C. So we're not going to hit the exact number to the pennies, obviously, but what we're going to do is track it. And you'll notice that last video I made, we had a February, March of 18 that we had an 11.4. It was exactly the same for the third and fourth month after the halving. And the third and fourth month after the halving this time was January, February, and those numbers were exactly the same. So what we're noticing is extremely close tracking. See this 60% and those are 58. You see how close that is? It's just a couple percentage points. So one of the things we've noticed is that in general, the 22 pattern is running slightly higher. The percentage is slightly higher. Now that's good because that's good support. That's good. That means that the overall strength of the crypto market is strong. But we're noticing if we average those two out, 58, look, and 58. So we notice that we're getting extremely, extremely close. And there may be variations just like you see here. That's a drop. See, this is 59, 50, this is 67, right? But look, this drops. They both drop. So what we're tracking is when the things go down. You'll notice the month after we got the 90s and the 80s, and we had those same numbers. We had some 90s, and then we had in December a 0.75 up to about an 80%. So in other words, what we're tracking is that sort of exact pattern. Let me go back to the camera. So what I'm trying to say is, obviously, if it says that in 2018 it was 0.589, so 58.9% of the all-time high. First of all, the all-time high number varies a little bit. Second of all, the timing varies a little bit. 16 to 18 months after the halving is when the all-time high occurs. So we're not talking about exact numbers to the penny. What we're talking about is a pattern, a macro pattern. And so far, since May of 2020, so we're talking about almost 2 years, every single month has matched this pattern. Now, I don't know about you, if you understand what I'm talking about, but that is huge. Because if we stay in the macro pattern, and the macro pattern has been going for 12 years right now, if we're tracking a macro pattern that's been going for 12 years, and it sustains itself, it means that we should be able to know when the low between the two highs is, and buy at the lowest possible point for a period of 4 to 5 years, the lowest possible point. Not the low this month, the low this week, the low this year, the lowest for 4 years. If we buy the lowest point in the 4 years, and on both charts, that is the end of this year. So 14 equals 18 equals 22. We'll know in November and December if we have crashed into the 20s on Bitcoin, upper 20s probably based on my current data, but once we go below 30 and have a sustained month of the 20s on Bitcoin, we'll know, and that takes place the last quarter of 22, we'll know that this macro pattern has sustained itself, and this is the low between the two all-time highs. Now, the reason no one's talking about this is because that means the next halving in 24, that's 24, that's 2 years away. Almost exactly 2 years until the halving. And it's 18 months, over a year, and a year and a half after the halving that the all-time high comes. So we're talking about waiting over 3 years, 3.5 years. People don't do that. They can't wait 3.5 minutes. Nobody wants to wait till the end of summer. They want money for their vacation right now. They want to turn their $40,000 Bitcoin into an $80,000 Bitcoin and double their money and take that money and go have a vacation. What we're talking about now is the long game. If this works, it's massive. Right now, we're staying on the pattern. It varies. It varies a little bit, and it might vary as much as a month or two, but the pattern itself has sustained from before this halving in 2020. This pattern has sustained itself since the beginning. I can't express how big a deal this is, but right now we finished with the first quarter. We're tracking almost exactly where we're supposed to be tracking. We've had a cool little bump here, which is great, but this bump is running around 60 as it should. We should draw back a little, then we should have a nice little hit in a couple months, get a nice little number there, upper 40s, maybe even early 50s. Then it should start withdrawing in the second and third quarters until you get a fourth quarter crash into the late 20s. If everything I just said at the beginning of April is true at the beginning of December, then everybody needs to be paying attention, because we know when the next all-time high is going to be. It's going to be near the end of 2025. This is going to require Herculean patience, but you need to take your positions at the end of 22 and early 23. You can take positions almost any time in 23, because 23 is just going to be mostly in the toilet almost the whole year. Nobody that's not a serious long-termer is going to be paying any attention to this by the beginning of 2024. No one's going to care. And that's when it starts to get toward the halving and people start to go, wait a minute. And the long-termers are in position already. Anyway, I know I'm talking about a 3-year pattern. From here, it's been a 5-year pattern. It's been a 12-year pattern. I know I'm talking about long game, long-term crazy, but I'm telling you right now, you saw from 2020 to the end of 2021, over a period of 18 to 24 months, you saw some of these things 20, 30, 50,000% gains. Think about Doge. Go back and look at Doge at the beginning of 2020. Go back and look at Shiba Inu, or even Ethereum and Bitcoin. Go back to the beginning of 2020 when Bitcoins were $5,000. Seriously. The lowest it should go is in the 25 to 30% range. And on a 60, upper 60s, that's in the 20s. That's what we should see by the end of this year. All right, I had to repeat all of that and show the chart and do an update, because this month is April. We have the full first 3 months, the full first quarter of 2022 in the books. We're still on the pattern, and we know exactly what to look out for. Massive crash to end of 22 equals massive gains to the end of 25. That's the macro pattern. Hang in there. Day trade if you want. Play with NFTs if you want. Have all the kind of fun you want. But start figuring out your positions. If we see these low numbers, start figuring out your positions for the end of the year. Once again, not official financial advice, okay? Education, pattern recognition, entertainment purposes only. All right? Dr. Chef's Crypto. If we watch this pattern continue, you need to share this information with your friends. Anybody you care about, anybody that cares about wealth or building wealth needs to know this information. All right. Have a wonderful day. See you soon.